Okay, good morning, everybody on YouTube and Twitter. And I think I see a green bar. So I don't know what PC did. Like I like to say, it's none of my business. It's my business to see what the market's reaction is. Then I can play macro bro and discounted cash flow analyst genius over the weekend. Um, just a hint of sarcasm. Okay, so basically, we see pretty much a nothing burger reaction, better green than red for now. And as I mentioned in my note, and we'll talk about it right here, right now, what part of what we see is an IV adjustment. The unknown becomes known. Some of the event volatility comes out of the chain or out of the surface of the SPX complex. What all that means is that market makers have to readjust their hedges. That's why we always get some kind of initial move that is simply a mechanical market maker adjustment driven move. They, quote unquote, the big conspiratorial they, aren't trying to trap you into buying, selling, or to trick retail into doing anything. I know people like that because it's really good to blame them rather than to have a trading plan that takes that into consideration. But there's no they, there's no ghost in the machine. There's hundreds of thousands of market participants, all with competing aims and goals. The sovereign wealth fund of Saudi Arabia, I promise you, doesn't have the same goal of a high frequency algo that's scalping 10 seconds. And they may not be the, which does not have the same goal as a market maker, which does not have the same goal, et cetera, et cetera. Anyway, let's get off that soapbox. So here we are. Positive reaction. So I'm just curious. Take a quick look in the options chain and see how IV has readjusted. Now, here it doesn't look like it's readjusted, but I call BS on that. I call BS on that. Let's type in SPX. Well, it hasn't readjusted here in the chain yet. Maybe because the event vol was so low, but there's some readjustment. Okay, we'll see later when we open. Okay, let's get back to let me get back to the presentation at hand, so to speak. Okay, so basically a nothing burger reaction. For sure, there was event vol in there, and it came out. By the way, 6,500 is the largest strike on the board, so to speak. So that's where we're going to have the most sticky action, the most pull or push. And to see that, let's go. By the way, say hello. I like to see some comments. So I know I'm not talking to myself. Not that I mind talking to myself, but in general, I like to see comments. Depth view. Okay, so going to options depth view. I just want to see something and illustrate something real quick. 6,500. Good morning, Doc. 6,500, 6,500, 6,500. Just kind of looking across the board here. It's actually not the biggest strike on the board. Spot Gamma is wrong, but that's okay. He's entitled to be wrong. So here we have the 6505 JP Morgan collar. Quick note. Notice it says 21,973. If you can't read it, that's okay, Sherman. Um, Notice it has 60, just has 21,000, and everybody's going to say, but wait, there's supposed to be about 40,000 contracts there. That's exactly right. Where's the other 20,000 contracts? Answer, part of this trade goes to the public market makers. Another portion of it gets allocated out to whoever else warehouses the risks, banks, let's go say Goldman Sachs or whoever else, and they're not market makers, and that's not listed in OI. So just because you see something in OI or not, doesn't mean that's all the open interest on the planet. There's structured notes, there's other products out there that exist. Oh, hey, David, haven't seen you in a while. Good morning. I'll put you on there because I know if you have a comment, be nice to, be happy to hear it. But first, let me get on with my presentation. But say hello.
Hello.
Okay, thanks. So here we are. So here we are. David's been an active participant in the community pretty much since we began on Substack. All right. I always use we, even though we is me, but it doesn't, but we are a team. So, okay. So where's, oh, we don't see SPX here because SPX didn't open. Okay. Now I didn't mention this in my note, or I mentioned it to somebody last night and this morning who I've kind of been tutoring, trading, teaching, discussing, for lack of a better word. Um, you might be able to see this little tail here. What that is there were this many more market makers short, long customer short contracts over here at 64.85, and they're gone. There's nothing there now. Similar at 90. So some 90s have been bought in the pre-market. Some 6500s have been bought in the pre-market. Even some 6530s. So this landscape changes. What we're looking at is a snapshot in time, and broadly, the plan will hold throughout the day. Locally, when I say locally, I mean within, good morning, Perry. Locally, when I say locally, I mean within, 10, 15 points of where spot is trading locally, there's going to be action. We had it yesterday. Yesterday in the morning, I specifically remember 65,490 was a pretty big customer short, market maker long stall kind of strike, as was 6,500. There was a lot there yesterday. There was a few thousand, three similar to this size. By the end of the day, this became customers long, market makers short, magnet. It's not necessarily that whoever put this trade on closed it, or whether this is one trader or 100 traders or 1,000 traders. What it is that the intraday volume locally near these large strikes or near where we're trading eats through these levels. So I'm just going to do this. I'm just going to pick on this as an example. It's kind of a teaching moment, so to speak. So right now we're at 80-ish, basically flat, right? 85-ish, 90-ish. Okay, whatever. Let's go back to here. So we're roughly over here. Value, it says, you can't read it, 412. That's not a lot. So if an algo comes in and buys 1,000 or 2,000, 490, 6,500 call debit spreads, this gets eaten away and the whole landscape changes. Similarly, if we go down and we're at 56.75, where there's really nothing there, inflection point, nothing there, and they start buying 46.70 puts, or in the morning they start buying 46.70, 64.75, 64, whatever put debit spreads, that could change this whole landscape. 64.65, that's pretty chunky. That should stay, but that could get eroded. I'm not saying it will, but it could. That also happens to be more or less the bottom of the expected move. That also happens to be yesterday's low. So, good chance that's going to hold. I'm saying all that to say this. And yesterday, if I knew how to go back in time, I'm sure there's an easy way to do it here, but that's above my pay grade, and I don't want to screw up my thing. Um, this wasn't the landscape in the morning wasn't the landscape where we closed. Okay, now we see some more sellers just came in at 64.50. What happened during the day yesterday was a big trade came in, and I just texted it to somebody. I think it was 64.40 on the bottom puts and 65.05 on the top calls were sold in size. And what happened yesterday? If you were watching pinball or just watching the action, we went up above 64, 65.05 and pulled back. That big trade held its ground and set the edges for the day, and we closed under it as inevitably we would. We also got an intraday update, and the wise owl in my trading room who tracks these trades, there was about 5,000 call puts at 6,500 bought yesterday at around 3 or 3:15, and that created a high expectation that '05 wasn't going to hold, and they were going to head toward 65, 6,500, and we did indeed close in the middle of that. So I'm saying all that to say this. These levels will broadly hold, but there will be changes, and I update my people intraday as we see stuff happening. And you got links to subscribe if you're interested. Shameless plug. I'm done with the marketing part of the story. Okay, next. What else we have on deck today? Aside from PCE and all that, we have the famous JP Morgan collar roll. And for that, let's go back to here. So JP Morgan, whose short calls I just showed you over there, does a collar trade. And for those of you that aren't quite familiar what a collar trade is, a collar is simply you sell a call wherever you choose to sell it. You buy puts or put debit spread wherever you choose to buy them. It caps your gains, but also minimizes your losses. For today, JP Morgan's short call that they sold 3 months ago, they have a rolling series of 3-month collars, affectionately called the baby bear, which is only 5,000 contracts. The mama bear, which is around 10 or so, which expired in July, and the papa bear, the quarterly, which is the big one that I just showed you, which is about 40,000 contracts. So this is the baby bear. So it's only about 5,000 contracts, 62.10, I believe it is, in the money calls. That's going to expire worthless. They capped their upside at 3% from when they entered it in May. So they made 3% from May till now, forgetting what the market did. That's okay. It's a hedge fund. People don't want to take risk. Wonderful. They're happy with the 3%, with their 1% a month, 12% a year, high net worth. Give me your 50 million bucks, and I'll give you your 1% a month, and we'll call it a deal. So let's talk about the construction of the collar real quick. I always like doing this exercise for myself, so we'll do it together as a team. So the way the collar is constructed, The call selling is secondary, so to speak. First is what we have to decide what puts we want to buy. And JP Morgan, in their infinite wisdom and with their back testing and whatever it is, have determined that 5% down, they're, so they're willing to tell their customers, we're going to, anything more than 5% down, we got you. And we got you between 5% down and 20% down. What happens if it's 50% down? Well, too bad, you lose. But why do we cap it at 20% down? Because we have determined that in a rolling 3-month window, we will close within that 20% down. We may go down to 50, but we'll come back up 90 whatever percent of the time. That's the collar. Take it or leave it. So that said, I'm just gonna broadly take 64.90 times 0.95. I want 95% down. 61.65. That's the put they're gonna buy, ish. So we'll just I always like doing this exercise. You guys get to see me do it. So they're going to buy ish this put. Could be 5 or 10 points higher or lower. Because it's going to be struck at the close price. And there's a readjustment later. We'll talk about that in a minute. So that's the put they're going to buy, more or less. But they do a debit spread, so what are they going to sell? So we're going to clear that. And we're going to take the same 64.90 times, 64.90 times 0.8 gives us 51.92. I'm going to go all the way down here. And did I get, is my arithmetic right? Let me just double check. Yep, 51.92. So somewhere in here. Not going to make much difference. That's going to cost them $44, so to speak. Well, how do we do it? We're going to build a wall and make Mexico pay for it. We're going to build a collar and make the market makers pay for it. And so we're going to sell roughly somewhere in here. We're going to sell something like that as 67.30 collar call. To pay for it's a free trade. I like when I construct these, I know it doesn't end up this way, just to kind of play around, to kind of make it a round number. So let's just make this 75. I like round numbers. And make this 25. Comes out more or less the same credit. So it's going to be something like 62.75. Let me take a screenshot of this. And I know that's not exactly accurate. Don't sue me. I'm going to give it to my buddy here, Nanda, to keep for safekeeping for later. And where are we? Okay. Now, 67.25. What are they, crazy? Well, yeah, that's what you said in June when they sold 6,500. And that's what you said in whatever month when they sold whatever they sold. Somehow we end up there. This is the small one, though, the October. Remember, the one that they sold in May was 62.10, and that seemed like a crazy number in May when we were coming out of like the April slaughter. Usually, if anyone doesn't get violated on top, it's the October and the April. Because the April one is usually put in in January at the seasonal highs. January we tend to top out, so that one doesn't get run over. The October one often doesn't get run over, but the one that they're going to put in September for December, I'm willing to say that we're going to close real close to there. Just like they have the September right now, the 6505, and we'll tend to close near it or above it. That's going to be sticky, exerting an influence going forward, especially as we get closer to that in time. And so that's the JP Morgan collar. I covered that. I just want to make sure I'm covering everything I wanted to talk about. Okay, yeah. 3-day weekend. 3-day weekend. Right? No trading on Labor Day? Is it a 3-day weekend? I think it is. Let's just check the chain. Is it a 3-day weekend? Right? 3-day weekend? The
It
30th,
is.
30th? Yes, it is. Okay. 30th, 31st. Okay. Just checking my numbers. 4 days, not 3 over here. Okay. So we have extra theta. These options are going to be cheap. Now, I didn't do it this week, but this event vol was IV was 17 earlier today. Great setup for a diagonal where you sell this vol and buy this vol. However, um, that that bus has left the station. But what I am saying is, I like to sell out in time, but I ain't selling puts for Monday with vol this low. I might want to play around and do some kind of I don't know, broken wing fly or something if I get bored. Something like that. Not that I would necessarily do these strikes. I'm just kind of thinking out loud. Something like this. No, I ain't doing it for that cheap. Maybe a 5-1, something like that. I don't know. But the point is, I would do a broken wing trade. I'm not picking these strikes necessarily. I would do a broken wing trade, not a full spread. Might even pay on a day like that to do something like, I'm just thinking out loud here, to buy the expected move, buy inside the expected move, something like that, and something like this, something like this. Whoops. Something like that. About 2/3 the width of the spread you pay, and you try to realize that amount. That's your defined risk. And then let's just get rid of this side for a second. And then you could pair that with, like, each side's about a $2 debit. Again, you might want to move it here. That's not the point. Let's just say you move it here. And I would pair that with, because I'm a cheapskate, I would pair that with something like maybe something like that. Still going to be a debit, but something like that. So it's an asymmetrical condor. Iron condor can be bought and sold, and just like we have a fly and an iron fly is at the money, an iron condor is both strikes are at the same strike. But the condor formation, if you look it up, Investopedia, or wherever you learned your options 101, a condor structure by the book is equal distance. So by the book condor would be 10, 20, 30, 40, and you could buy a condor or you could sell a condor. And you could just reverse it. I mean, you could do whatever you want. But you understand what I'm saying. You could do sell, buy, buy, sell. You could do a condor like that. That's not a bad trade. Or you could do I like to do it if I'm doing it buy, sell, sell, buy, something like that. But this way, it's too expensive. But you play with it. You play with it. Usually, I'm going to give it more room up here. But anyway, and I wouldn't be that close. Yes, it's closed. Okay, so I got everybody confirming that it's closed. David, you want to comment or say anything? I don't know where Bad Hombre or all my other people are, or where Punk is, or Dan. The whole crew seems to be on Labor Day vacation already.
That's probably what it is. Everybody's left early.
Okay, nice thin liquidity. Better to take advantage of things.
I'm going to certainly try.
So what have you been doing more? You've been doing more ICs or scalping?
I've been trying to trade some butterflies.
Ah, flies. Yeah, good.
Yeah,
For those, go ahead. Finish talking. I'm sorry.
that's all I was going to say. I figure I can use butterflies to bail me out of spreads. So butterflies, there's a lot less risk to the downside for sure. But of course, you don't make money to the upside either unless you get really lucky.
Right, and I know Boomer kind of does something similar. I haven't looked at his stuff exactly for a while, but Boomer makes what I call Frankenstein flies. Before I met Boomer, I called them Frankenstein flies, where it ends up being this crazy multi-leg structure with maybe 6 or 8 strikes, long, short, sold here, there, and and they end up making money.
Yeah,
They end up making money. You have to be able to think on the fly and think in 3 dimensions and see where the levels are. But
that's
it's
what
good
I'm learning.
stuff, huh?
That's what I'm learning. Yeah, what I'm going to do today is a couple of butterflies centered at 6,500, a couple of call flies, and then,
Okay.
and then I'm going to sell a put debit spread at 64.75, or a cut two of them. And if price moves against me, then I'll just convert those put spreads to a put fly.
There you go. Beautiful. Okay.
Yep.
He's learning. Now, speaking of flies, I just want to show you guys this real quick. Yesterday, I don't know if you could see this. I mean, here's the. I was saying before about my conviction that we were going to close below um, 6505, even when we were above it. And here's the butterfly that I sold, but that's not what I wanted to show you. Here's the calls. Here's what I wanted to show you. You see, now I chickened out. I'm curious. See, now it's only 90 cents. Yay, me. Okay. So what am I showing you? This came in yesterday. I did it. The trade was, let me find it. No. The trade was somebody bought a fly. Where is it? This is for all the real geeks here. Why can't I find it? It was around this time. Here it is. I paid $1.35 for this fly, 25.50, 75. I mentioned in my note, and I pointed it out to you people. To you people, I hate to sound like that. I pointed it out, and it was like pretty big, like 5,000 contracts. And I said, you know what? Maybe that algo knows something. And so I spent $1.35. I went out to feed the goats at whatever time it was at no, that oh no, right, this one I kept on till the end of the day. Then at the end of the day I looked, we were over 6,500. I saw I had 3 or 4x. I said, you know what, cost me 135. I can get out for I can get out for $4. I'll take it. And that was that doesn't happen all the time. The reason it happened is because we have somebody in the room that tracks the intraday flow for us. Um, yep, risk-free trades, Frankenfly. Yep, my man. Great minds think alike. Um, and he tracks these and when a lot of times when I find these institutional trades that come in, 3,000 contracts of something that sounds crazy, well, not crazy, but whatever, I'm going to follow it. I'm not going to bet the farm, but am I going to throw a couple $100 at it? Sure, sure. Depending on your account size, that may or may not make sense. Now, if you have a smaller account, then do it with XSP instead. Do it 1/10 the size, or with a few spies. You don't have to, or you can modify it. So when this trade came in yesterday, for example, I also did one closer, 6,500, 6,525, 6,550, that I closed earlier in the day in a different account. So I did two of them. The reason I did a different account is I can't be short and long the same strikes in the same account. And this is kind of my play account and my demonstration account. This is just a small IRA. And that's it. And so you might have noticed in the thing there was a link to Whoop, WHOP. That's going to be a landing page platform. The content will be there. Substack will still continue. I'd like to, over time, migrate people over to WHOP for payment. Even if somehow Substack will figure it out where you get the content there in both places or on my server, we'll figure that's kind of a moving target. But whatever you have right now on Substack, if you've paid a month, a year, whatever it is, that's going to go on for now until we just figure out how to migrate the payment over there, and then maybe the content will be on both places until infinity and beyond, probably. I don't know, but Substack payment is just a pain in the butt, as David could attest to, since we had payment problems with him trying to do something. I don't even know if we ever figured it out with their support, whatever. So anyway, that's that. And also the Whoop thing. Also, we have be offering an ES scalping room and some other stuff, unusual whales, option volume, and all that in a premium $99 a month deal. Probably a discount coming out over Labor Day weekend for the $99 deal or something. I don't know. So anyway, that's that. Done with the shameless plug. And it's 9:05. Anybody else here want to be added? Want to say something? Comments, predictions?
Get Boomer to talk to us about those Frankenflies.
I will. And maybe, Boomer, we could do something. We could set something up for maybe a Sunday or Wednesday evening webinar where you kind of walk us through your Frankenfly. We'll get in touch separately. You can invite your people. We could have like a little party. Okay. So let it be written, so let it be done, as they say. Because I know the general idea, and I've seen your thing before, or videos or whatever it was. I've seen picture screenshots. I've never really walked through the thinking that you have behind. Like, I start here, I do this, then when I see XYZ, I do ABC, whatever. So I'd like to kind of hear the nuts and bolts of that. And
yeah, that's the biggest thing, is understanding the thought process. Then you know how to react yourself.
Right. Once you understand the basic theory, then you react yourself, and of course it becomes successive approximations. Oh shit, I should have done that. But the only way I learn from that, I'm not a paper trader kind of guy. I learn when I have skin in the game. If I have no skin in the game, guess what? I don't learn anything. Okay. Oh, and you see these 6550 calls? Yeah, these puts, I'm not sure when I put these on. I'm not sure why I have puts that close for today, but these calls, I probably forgot to close this out. Not that it's, not that it's bad, because what the other thing we do, and do I have it ready yet? No. So at 9 o'clock, this populates with the expected move for next week. Here's and here you see like the history of it. Now here we closed above the expected move. We tend to close in it once in a while below, once in a while above it. And every Friday I look at this and I post it. I look at the wherever the expected move is going to be, and you can figure it out yourself. I guess like the graphic, and then I'm going to go over here. I'm going to see what next Friday is: Tuesday, Wednesday, Thursday, Friday, and I will see where I have market maker longs to protect me from what I'm selling, and where I have market maker longs below to protect me. That's outside the expected move. I'm not in the prediction business. I'm in the safety business. If I'm selling insurance, I want to make sure that I have a good chance of getting paid or whatever. Let's just do that. And so I look down here. I don't really see much yet. Well, 6205, but I'm pretty sure there's not going to be any juice down there. And we know, because while we're here, and we don't really need that. I guess like the visual, because we know the expected move is going to be around this 2016 delta. That's going to be around here. Wow, 6,400 is now out of the money. 71 point expected move, so we'll call it 100. We'll call it even 150 from 65. 150 from 65 is 6,350-ish. So how far below 6,300 can I get? 15 wide, that's not bad. And on top, I'm not going to be able to get that good. But let's just go what do I do? 15 wide. Let's just go something like that. $1.10-ish. That's not bad. Maybe move this one more. I don't mind that. I'll just put that in as a starter. I may or may not manage it, whatever. But I'm just demonstrating what I would do looking at the expected move that I get on that little chart and then titrating it with this. And so I'm looking here, and there's really not a lot of gamma here. There's, if anything, if we look across the chain, 6,400 is a pretty easy, reasonable downside target. You got 3,000 over here. You have 12,000 over here, 1,200 over here. So you got some bears 100 points away for next Friday, which is not crazy. It's a little bit outside the expected move. And up on top, you don't have much. You have 65.80, so you want to be above that. 66.25, we want to be above this cluster. Anyway, that's the kind of fun we have. Um, let me put the WHOP link in, and I'll make sure that I get the discount in today. Well, give me 1 second. You can do a 5 wide. I'd have to just adjust it a little bit. Let me give me 1 second. See that? I mean, you can wait till Monday, but always good. Where's my WHOP thing? That's the WHOP, and I'll make sure we get a discount in soon. Okay, that's it. Uh, Now, yeah, iron condors are my thing, quote unquote. But I personally also do debit spreads, credit spread, debit spreads, long options. I tend not to buy naked long options that much. I'll usually do a debit spread, a flyer, or something. Um, Little bit of futures, but we have a couple of people, we have one guy that like does the futures room. You can always use futures with ES anyway, with that ES with SPX anyway. Some individual trades I put in. I've been pounding the table on the software names for at least a week. Now let's take a quick look at some of those. Since I like to talk and I like to talk stocks. This is Mentor Q. I got a discount link for them if you want. And so, of course, the poster child for that was MongoDB the other day. MDB. Boom. Another one that I was in was Elastic. I think, what's the symbol? ESTC, Israeli company. I sold mine in the aftermarket. I saw this after earnings. I mean, it's still fine here. I got in somewhere around here. I've been in this one for a while. I've been nibbling on these beaten up software names. You can see the same pattern here. You're going to see a similar pattern, not as bad with Snowflake. Similar pattern. Look at that. Snowflake. Um, I think NetApp, NTAP. Well, these guys, the pattern wasn't as extreme. Was it NTAP or APP? NTAP, NetApp here. Similar pattern, a little crazier in NetApp. Was up about 8 points. Um, Okta. Now Okta popped good and pulled back. I own it. I sold puts. I closed them, etc. This is one I'm going to add long term. We popped to 99. I closed a bunch of it. Now it's pulled back. It's a messy pattern, but I'm willing to sell puts down here somewhere 85.80 for October or November even, and just get paid. And kind of this is one I would wheel. This is one I like fundamentally. Not that I'm a fundamental analyst, although I have been a stock picker way before I was an options trader. I was a stock picker in the 80s, 90s, etc. And I do pretty good at the longer term trades. What else? Okay, so let's just look at IGV in general. And we talked about it live on TV. Let's just make it a 65-minute chart so we can just kind of get a better feel for the pattern. IGV, the software ETF, kind of near 100, 103, 104. This is not going to move obviously like an individual name, but you got move now. It's that horse is left the stable. We were talking about it right here on air uh, when it was right around here. And here you have 104 again in June. You have this in May 104. So this zone, the 100-ish area. Now, the problem is that the options are spready. I like to sell puts. I haven't had a trade on in this in a while, but it might be tradable here. I have to decide. Um, I own shares for a million years. I've owned this forever. It's got Adobe in it. It's got Microsoft as a large holding. It's got Intuit. It's got all your favorite names, and Adobe and Intuit have been really beat up. Uh, I just think it's the old get a quality company like Adobe, cheap, and leave it for your grandkids. But anyway, okay. Now I've gone way off of my SPX reservation into all this other stuff, which I put those trades in. We talk about it. The super deluxe premium, whatever it is going to be $99 a month, $9.99 a year, with some kind of discount coming out over Labor Day weekend. And so not hard to guess that people are going to be buying the 6,500 calls. Not hard to guess. Okay, now I'm going to go. Take care, everybody. Thanks for listening.
You too.
Like, retweet, whatever. Yeah, go ahead. You want to say something?
No, I was just saying you too. Have a good day.
Thanks. Oh, I thought I was sharing my screen for that, but I wasn't. Okay, never mind. Too late. Bye.